Welcome to the Explainer. You know, for decades, gold and silver, investors have pretty much treated them like financial twins. But is that really the case? Are they always moving in lockstep, or is there some kind of hidden rivalry we've all been missing? Well, today, we're putting their entire 80-year relationship under the microscope to find out for sure.
So here's the big question, right? Are they financial twins? And to answer that, we're going to go on a journey, all the way from the end of World War II right up to today. And what we're going to uncover is a story that, well, it starts with some super strict control, then it just erupts into chaos, and ultimately it reveals a connection that's way, way tighter than you might think.
Okay, so our story begins in a kind of weird place for a market tale, a period of just absolute government control. I mean, for over 20 years, the prices of gold and silver were anything but free. This quiet, controlled era, it's really the calm before the storm. And honestly, it's the key to understanding everything that happened next.
So for what? More than 2 decades after the war, prices weren't being driven by markets at all, but by policy. Gold was just locked at $35 an ounce to keep global currencies stable, and silver was capped at just under $1.30 to make sure coins were cheap to produce. This whole thing created this kind of artificial calm, right? It left absolutely no room for the true relationship between the metals to even show itself.
Yeah, their prices weren't moving together because of some natural market thing. Nope, they were literally pinned down by government policy. But of course, that kind of forced stability, it just couldn't last forever. Under the surface, you could feel these market pressures building up, and it was setting the stage for a really dramatic shift.
And then, the controls just came off. The market was completely unleashed. This is the moment. This is when the true personalities of gold and silver were finally set free, and their real relationship, well, it started to get forged in the fire of open trading.
And let me tell you, that new personality, it was explosive. In the late 70s, the infamous Hunt brothers tried to corner the entire silver market. I mean, they bought up so much physical silver that they sent the price into the stratosphere. This one event was basically a declaration. That quiet era was officially dead and gone.
$50. For a metal that had been legally capped below $1.30 for decades, this was just an earth-shattering number. It was the first really stark piece of evidence showing just how wildly silver could behave when the leash was finally taken off.
So this revealed a whole new pattern. It wasn't just about speculation anymore. See, major global crises, like the oil shocks in the 70s, and of course the financial meltdown of 2008, they became the new puppet masters. In times of fear, investors consistently ran to what they saw as the safety of both gold and silver.
So, okay, we've seen them react to the same major events, but just how deep does this connection really go? To find the real answer, we've got to move beyond the stories and dive right into the numbers, the financial forensics of their relationship.
And this number, this is the smoking gun, 0.93. Now, in statistics, that is an incredibly high correlation. I mean, just for context, assets like stocks and bonds, they often have a negative correlation. So a positive link this strong tells us that ever since they were let off the leash when gold moves, silver has followed its lead almost step for step.
To put it really simply, a perfect correlation is a 1.0. At 0.93, we're looking at a relationship that's about as tight as you can possibly get in financial markets. So when gold zigs, silver almost always zags in the exact same direction.
But, moving together doesn't mean they're equals. To understand their relative power, we need one more tool, the gold-silver ratio. Think of it like a financial seesaw, constantly showing us how many ounces of silver it takes to balance out just 1 ounce of gold.
And whoa, that seesaw has been on a wild ride. Back in 1980, you only needed about 28 ounces of silver to buy 1 ounce of gold. By 2025, that jumped to nearly 86. Now, when the ratio gets this high, it often signals to traders that silver might be pretty cheap compared to gold, and that seesaw could be due to tip back toward its historical average.
So, we've got this incredibly strong connection. Case closed, right? Well, not quite. There's a twist in the modern story, a really crucial difference that explains why these twins aren't identical after all, and it all comes down to silver's secret double life.
Here it is. This is the critical difference. Gold is almost purely an investment in jewelry asset, but silver, half of its entire demand, comes from industry. This gives silver the split personality, right? It's got one foot in the world of finance and the other firmly planted on the factory floor.
I mean, think about it. From the smartphone in your hand to the solar panels on a roof, silver is an absolutely indispensable industrial metal. And this means its price isn't just a reflection of financial fear, it's also a bet on economic growth and innovation.
When factories are humming, silver's value can rise for reasons that have absolutely nothing to do with gold.
All right, after looking at 80 years of evidence, from strict control to market frenzy, from historical anecdotes all the way to the hard data, it's time. Time to return to our central question and deliver the final verdict.
So, the evidence is clear. Gold and silver are indeed financial twins, but they're fraternal, not identical. They share the same core DNA, acting as safe havens and moving in sync during crises. But silver's industrial identity gives it this wilder, more volatile streak, one that sometimes pulls it in a completely different direction.
And that leaves us with a really fascinating question for the future, doesn't it? For 80 years, these metals have walked a similar path. But our world's transition to green energy and advanced tech is creating this just insatiable hunger for industrial silver. So, will this modern demand finally be the force that drives a wedge between these financial twins for good?